Hi everyone.
Hey, how's it going?
Pretty good. Sorry for arriving late. 2 minutes.
No, no worries. I'm glad I checked. Yeah, thank you so much for joining us. Sorry to kind of disturb you on a Sunday, but really glad you could make it.
Sure,
I know you
of
only have
course.
about 30 minutes, so we'll get into it pretty quick. So we have about 25 people here on the call. And Oriel, to give you kind of an overview, so I started this community called Advisory, and it's really a community for founders, especially in Web3, to just come together, learn from each other. We have these weekly community calls where we share experiences building in the space, do some activities and things like that. So you're our second guest speaker. Previously, we had Jess from Seed Club join us. So yeah, really looking forward to an exciting session today. As I shared with you, I have some questions planned. So we can kind of run through that, learn more about your experiences, and hopefully everyone in the group feels inspired by the end of it.
Fantastic. I'm really excited to be here. I think we had a prior conversation together some time ago, but I think there is so much going on in our industry. It's always good to reconnect, and I don't know if we will have also room for questions for everyone, but maybe I know there is a chat in Google Meet if you want to react or leave some comments while I'm speaking. Please do so.
Yeah, that sounds perfect. Yeah, we had you were invited on our Twitter Spaces for Join Circle. This was like last year now, I believe. But yeah, let's kind of get into it. So Ariel, welcome. I sent your bio to everyone prior to the call, but just would love if you could maybe tell the group a bit more about yourself and specifically highlighting some of your past experiences, especially your roles at ICQ, AOL, TechCrunch, and Isai.
Sure, of course. So just to make it short, 20 years in tech, so not little kids anymore. I've seen a thing or two. I've been on both sides of the coin, no pun intended. I've been both an entrepreneur and also an investor. I started as an executive in very large companies for a very short period because it was not made for me. And then I started into the world of entrepreneurship. That was in the early days of the web, AOL era. Created my own company, and then fast forward. So that you probably heard I skipped that part, but I'm French originally. And after I sold my first company, I moved to Tel Aviv in Israel. I worked for ICQ for some time, which was part of AOL. That was Web 1 era. That was the beginning of the Web 2 era. Messengers, first generation, started to become irrelevant. And social networking started to appear. ICQ became a dinosaur. At the time, I started to get very serious about blogging. I was one of the first contributor and shareholders of TechCrunch. And that was someone has an ICQ number. You probably remember the sound too, no? That's going to end up in a museum one day. So I was starting to blog at the time, very seriously, become a very heavy contributor and shareholder of TechCrunch, which we sold to AOL. Kind of ironical because I was leaving for AOL and came back to AOL. And I jumped into venture capital. I was the beginning of Web2 with the Flickr, the Delicious of the world, and many other MySpaces and beginning of Facebook. Started to invest into that era. I didn't know anything about venture capital. I learned everything there. I made all the possible mistakes, mostly all failures, but one of them or a couple of them became extremely successful and exited. So it was not all failure, but I learned a few things. Then I moved back to building companies. It was the beginning of the iPhone era, mobile application. Build a recommendation engine for mobile application, which became eventually an ad network, which I sold, company called AppsFire. And then after that, I forgot to explain that, but I moved to the US, spent a few years in the US, in the Bay Area. Then I moved back to Israel, and I started to get interested into crypto. And that was in 2017. At some point, decided I wanted to make a business and to make a career out of it. And so I created ZenGO, which is the company that I'm running now, which is a crypto wallet that has now a significant presence in the market. I forgot to mention that in parallel of those things, I co-founded a venture firm in France. I know it sounds a lot, but I work a lot. And so I was a co-founder of a fund. I was 12 years ago, which I invested in internet and tech companies. Now the fund is very, very large and successful. I'm not operating there. There's a large team running it, but I'm still a GP and an LP in that fund. So we've been investing in over 50 or maybe even more companies, many exits, many refinancing. So I have the views from the inside of how Venture works, not just from the outside as an entrepreneur. And that's it. So now I'm in crypto, doing crypto wallet, which is not the easiest thing. If you're following the news of what happened in the last few days, you probably realize that this is not always easy to run a crypto wallet, even now, actually, in particular now, and we can talk about that a little more. And that's it. Very, very busy, as you can imagine. And I also have a life in addition to that, doing many things, not just working. But we can talk about that if you want in work-life balance.
Awesome. Thanks so much, Ouriel. Always impressed by your kind of entire resume, and I really appreciate you again, making the time with everything you have going on. So during your intro, obviously you touched on ZenGO, and I think, Web3 security and everything we're seeing with Ledger now is probably one of the most important conversations in our space. So kind of before we get into, I guess, Web3 security, I'd love to understand from you what inspired you in particular to start ZenGO. And, the mission is ending financial exclusion. So how does that really drive your work? I think understanding the mission and value proposition can be really important for founders.
Yeah, so the motivation was double, one negative, one positive. The positive one is that once I got into crypto, I understood and I had the insight that every single asset at some point will become digital and would be on the blockchain, and that for accessing those assets and transacting in an economy, you would need a crypto wallet. There was no other way to do that. And so for me, the positive motivation that there was an opportunity to build a piece of software that would be central to the most important part of, to a very important part of our life, meaning participating into an economy, a new economy controlled by the people, where the balance of power is rebalanced and not in favor of companies. So I was extremely attracted by the power of that mission, by the challenges to make that a reality. And of course, not something that happened overnight, would probably take decades, but the direction of it, there's an echo from Ouriel. Or when you're speaking, Sylvie, someone said there's an echo, but now you're not speaking, so I assume there's no echo. Sorry about that. So I was attracted by the mission of building an interface where all assets would eventually become available, and that would be the central part of what you use for participating in economy. That was the attraction to why building a crypto wallet. Not just at the time, it was, just for trading, buying and selling Bitcoin, buying and selling Ether. But if you think about what a crypto wallet is, it's a central primary interface to access digital assets and use them in some sort of way into an economy that is built on chain, where the power and the control is in the hands of the user. So that was extremely attractive to me. The negative motivation that every single solution that I tried at the time was, for me, ending in a fiasco. I just hated every single crypto wallet. And actually the debate that there is right now around Ledger, around hardware wallet, around seed phrases was relevant at the time, is still relevant today. I could not imagine for a single second that the future of the economy, the future of the digital economy, of the crypto economy, if it was going to become so important, could rely on people storing, whether this is on a piece of paper or in a hardware or in a fridge or God knows where else, a set of 12 words or 24 words. Like, that makes absolutely no sense to me. This is a reality I completely refuse to accept. And I wanted to build something that is better. A system of security that was reinventing the rules of authentication, the rules of recovery, the rules of accessibility, the rules of protection against external attacks, and more importantly, the rules of protection around human stupidity and the mistake that you make because you're just human. And so I wanted something that was resilient to that. And so we had to reset the rules, reinvent the way we could build a crypto wallet. And this was the inception point of ZenGO, meaning we rejected the reality as existed, 5 years ago, which is still, by the way, a reality today. And we are determined to make it something that obviously one day will become a standard. So that was like on the two motivations that drove ZenGO.
Awesome. Thank you for sharing that, Ouriel. And kind of wanted to understand a bit more, you said you tried out the existing solutions on the market and obviously didn't really enjoy the experience. So could you maybe touch base on, where it is that ZenGO really strive to improve on the current design? I know MPC being kind of the core function. So what MPC is for the community, and also, what are some of those ideas that helped you differentiate from anything else in the market at the time?
Yeah, so most crypto wallets ask you to kind of keep this secret called the seed phrase, right? It's a single factor set of 12 24, but it's a single factor that conditions the access to your wallet and allows you to basically spend the funds on it. So that's how 99.999% of all crypto wallets are built, whether they are mobile applications and hardware wallet or paper wallet, doesn't matter. So that ends up into you having to write down on a piece of paper or somewhere these 12 words, regardless of the solution that is provided to you. And so we wanted to what's wrong with that solution? Well, the thing that is wrong with that solution, and by the way, this is what led us to build this service that probably not going to see the light of the day, but how do you safekeep this seed phrase in a way that makes sense? Well, I have a scoop for you. There is no way that makes sense, because as long as you depend on a single factor security setup, it doesn't matter how you're going to keep it. Something wrong eventually is going to happen. And so the reason is because humans are terrible at making choices. And when you ask to someone, make a choice about how to keep your secret, someone bad is going to happen at some point, whether this is day one or day 100. So we wanted something that was not going to rely on a single factor, on a single secret. And instead we're using MPC, multi-party computation, which is a domain of cryptography we have not invented. It's been around for many, many years, 3 or 4 decades. We just made modern and for a crypto wallet. So the essential difference is that instead of relying on a single secret and a single factor, MPC generates independent secrets that allow to collaborate together without being in the same place at the same time. So it sounds like a minor difference, but it's an enormous architectural difference that allow you to remove completely what's called in cryptography the single point of failure. So what happens when you generate an MPC wallet? Independent secrets, codes, or key shares are generated in different places. In our case, it's on the phone and on our server. They are never in the same place at the same moment. So if someone attacks your phone or attacks our servers, they can't compromise the fund in any way. And by way of doing that, you can assist the user in all sorts of services and security protection that you cannot enjoy once you are alone. And so that's the starting point of ZenGO. It's built on MPC cryptography and not public-private key cryptography. The second major innovation of ZenGO is that we reinvented the way we do authentication. Typical authentication in a service login password or a PIN code or something of that nature. Sometimes if you're sophisticated, you're going to use a second factor, like a TOTP, a rotating code, something of that nature. And sometimes if you are very, very sophisticated, you're going to use a YubiKey or some sort of hardware protection. Well, in ZenGO, there is none. We wanted something that was completely passwordless and not relying on any piece of hardware except your phone. So what did we do? And many of the things I'm going to tell you now sound obvious, and they've been now routinely copied and reused in the industry, but we literally were the first company in the world to bring that to the world. So we use a multi-factor authentication, which is composed of a magic link. We're the first company to use magic links in a crypto wallet. So you can put an email, any email, even an anonymous one, you receive a magic link. Then you grant permission to a cloud that you control. So it can be iCloud, Google Drive, Dropbox, where one of the 3 secrets is going to be stored. And finally, we use liveness biometrics, which is a private anonymous biometric scan done on your phone. We don't see who you are. No one sees who you are. It's happening on your phone. It's not Face ID. It's a battle testing technology that is used by millions and millions of people, and that is resistant to pictures, videos, and 3D masks, and allows you to authenticate that you are you. And so you pass those 3 steps. It's super fast. In 10 seconds, you have a wallet. If you lose your phone, you do the same things: the email, the cloud, the liveness biometrics, and boom, you're back in. Nothing to remember, nothing to write down, nothing to lose, nothing to give away, nothing to fish, nothing to store somewhere safe, and your wallet is yours. And the experience is truly not just magical, it's incredibly resilient to attacks. We have nearly 900,000 users registered on ZenGO and 0 account theft to this day, which is a remarkable stats if you compare that to any system that exists on the planet, including hardware wallets. So we literally reinvented the rules to create a wallet, to recover a wallet, and to make sure that for users, it's not just simple, it's also more secure than traditional systems.
Awesome. Thank you, Ouriel. And congratulations on having the highest safety record among the wallets. I think that's definitely an incredible achievement. And the final question I have on security, I think, is just, for founders in the group, what advice would you give them to, one, safeguard themselves, but also safeguard their project treasuries? We've seen a lot of treasuries blow up to crypto hacks or phishing links. And so, your advice, I think, here would be really beneficial.
So I will not recommend a particular solution, but my recommendation is whatever solution you choose, and because everyone is comfortable with different type of spectrums, and I could hard sell you to use ZenGO, but I don't think this is the right advice. You should choose a solution that you feel comfortable with. But if you feel comfortable with a solution, you must understand the consequences of what can go wrong. Okay, so when you choose a solution, always ask yourself, what can go wrong? And second, I would also recommend you to simulate the what can go wrong scenario, meaning like really literally try to have a full cycle of not just creating the solution, putting the treasury, maybe not all of it, some of it, and kind of restitute the scenario in which you have to recover 100% your funds, and see if you are comfortable with that scenario. And that will make you ask questions about what you need to protect, what you need to be aware of. And once you have done that, you probably covered 98% of all the things that are important. There might be another 2%, but you will avoid like all the typical classical mistakes. And so make sure you understand all the limits, and all solutions have limits, including hardware wallets. Actually, I would say in particular hardware wallets. So understand the limits of where you can be a liability, where you can screw up something, how you could get attacked in all sorts of ways, whether this is digitally or physically. And second, do a full run-up, like, the creation, the deposit, you reset everything and you recover everything. And then you will get comfortable with the solution. So I think this is the kind of important step. Something finally, last tip, don't reinvent the wheel. Like, don't try to be cute with the latest and the greatest. Okay, yeah, try to use things that have been a minimum battle tested, and don't try to find your own way. You're going to screw up. Like, no one is great at security. This is not your job, and you're doing that 24/7. So don't try to think you're better than the rest. At some point, you're going to screw up. So go with something that is battle tested. That's it.
I think that's great advice, and I think especially the point of just testing out the processes that you have employed and making sure they work. I think that's definitely a key factor. So kind of for the final segment of my questions, let's go into fundraising. So there's a lot of founders in our group who are either actively fundraising or about to start soon. And congratulations to ZenGO. I know you guys not so recently closed your Series A round. So I'd love to understand, what are some of the factors for founders that are raising? What are some of the factors that you would say attracted investors to ZenGO specifically? And then also, what advice would you give in general to founders seeking funding, especially in the blockchain and crypto industries?
Sure. So we did raise a round recently. It's just an announcement. So I could not run, but you got the scoop. And so we raised in an incredibly hostile period. Right now, it's like really literally mission impossible to raise to raise a round. It's easier if you are raising a seed round because it's easier to sell the dream. And you don't have like to deliver any proofs. But if you are anything post-seed round and you don't have like serious metrics, serious traction, serious advantage to the market, it's going to be really, 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 really hard. So you need to brace yourself for a process that's going to be incredibly nerve-wracking, and be ready for hearing a lot of no, a lot of yes that will become no, a lot of nearly yes that stay nearly yes and never become a real yes, for people that will invite you to meetings, won't show up, like all kinds of crazy stories. The market right now is really kind of nearly frozen, I would say. Now there is hope because deals are still happening. And so I would say it depends which stage you are. I'm going to assume that most people that are in this call are in early stages. You tell me if I'm wrong, but I assume that's the case.
I think
most
like
people,
seed, and then we have a few that might be doing Series A.
Fantastic. So in case it's like a little easier. Well, the valuation are not what they used to be at 2-3 years ago. So brace yourself for that. You need to first remember something. First, you're not competing against crypto companies. You are competing against everything in tech companies, in particular AI. Right now, crypto is no longer the darling of the industry. Doesn't matter how sexy your project is, there is something that is sexier out there. So what you need to prove is that you have a viable business in the hand. What I mean by viable business is a route to revenues, is a route to profitability very early. Because, selling a beautiful dream in a world of utopia where everything is decentralized no longer works. Like that's really the hard reality. So you're competing with everything that is not crypto, not just with projects that are in crypto. Your valuation is going to be lower. I think the things that make a project work is, of course, you need to kind of brace yourself for to know resilience, never let go, don't let go until you find someone that will eventually say yes, and you will find someone that will say yes. Number two, you must have an outstanding team. So an outstanding team is a team that is not only skilled, but that is extremely complementary, relevant to the idea. When you present the project, you present the team with those three aspects: the skills of the team, the relevancy to the project, and the complementarity between each other. Finally, your project has to sound like it's a business, not like a beautiful dream. You have to come down with business language. You have to present projections of metrics that make sense with a go-to-market and a marketing strategy. The market in crypto is incredibly matured. There is obviously a lot of competition. Even though the market is in a bear market, you still need to make sure that you present the project as if you are going to go in an arena full of gladiators, and there is very few that will survive, right? This is really a bit like, like that. I operate in a space where I have about 300 competitors. I still have new competitors funded every 2 weeks, which I still cannot believe, but that's still the case. And you have to be ready, maybe not are relevant, but for at least 20 to 30% of them that are going to be really, really good, and maybe even better than you at many things that you're doing. So you need to be ready to get into the arena and fight. And you need to show that energy. You need to show that you want it more than anyone else. You need to show that you really, really care. And so you will be tested there. You will be tested by all sorts of questions, by all sorts of tricks. Venture capitalists know how to do that. I know I've been on the other side. They know how to test you, and you need to just like show up there and drive, bring the energy to the table, but not just you alone, you with your founding team. If you already have a product, if you have already some traction, that's already that's a great news. But here is the bad news: you have already a foot in reality, so you can't just sell like bullshit dreams. You have to go straight into how you can go from here to 10x here, and getting to 10x here seems impossible when you are where you are. I remember when we first started, we had like 5, 10 signups a day to our wallet and say, oh my God, how will I get to 50 and 60 signups a day? And then you get to 50, 60 signups a day. Oh my God, how do I get to 200? And you get to 200 and say, oh my God, how will I get to 500, etc., etc. So you need to think by steps and by incremental steps. Don't try to kind of make a plan on the moon. It's going to be virtually impossible. But if you are methodical about how you plan for progress and you share that with the investors, you will find a way to convince them. So bottom line, going to be very, very hard, like in particular in crypto. But think about how you present the team, architecture, your presentation of the team, the relevancy to the project, the combination that is magical between each other. Think about your company as a business, in particular now, and consider that you're entering in an arena ready for war. And with that in mind, you should be able to raise. I hope.
That's great feedback, because I think especially now founders do need to be realistic in terms of the pulse on the market, but also just understanding expectations. So that's kind of the end of questions that I had. Ouriel, do you have a couple of minutes to go over if the founders have some questions? Yeah,
I can still stay for a while. So no
okay,
problem at all.
Perfect. Okay, awesome. So I know Mukund has a question. So Mukund, do you just want to unmute and ask? And then if anyone has questions after, just feel free to raise your hand and I can call on you. Mukund, go ahead.
Sure. Thanks, Athwek. Thanks, Ouriel. Great talk, and especially the last bit on fundraising is definitely sobering, right? We know the market's bad, but then hearing up close, is definitely interesting. So you were talking about metrics at the end, right? And going in with those numbers. Now, I understand metrics when you're talking about usage, etc. But like, how much do financial metrics matter, business plans, etc.? Because my understanding is that they generally don't look at it because, it's still very uncertain, and those could be very much over budgeted, under budgeted, etc. So what are your thoughts on that?
So you know what they say about budgets?
Seed round,
Yeah, you know what they say about budgets? Okay, it's a joke. They say budgets are like sausages. You eat them and they're nice, but you really don't want to know how they made up, because then you don't want to look at them anymore. And so everyone on the planet that has been serious in this business of investing in startups knows that your budget is going to change a gazillion times. That so many parameters, whether you control them or not, are going to change. And so the important thing is not so much that, of course, the budget has to make sense. Let me be clear, right? You have to present assumptions that make sense. But the more important thing is how you argument about the structure of your budget, because the thinking behind it is what really matters. Because everyone knows it's going to change, and the investors will want to know that you will have the right mental model and the right reflexes and the right intellectual honesty to build an adaptation of that model in a way that will be understood, that will still be ambitious, and that will make sense compared to the original vision. And so don't worry too much about not getting it right and perfect forever, but worry more about making sure that whatever you put in that cell, whatever assumption you have there, you can tell a story about it that makes sense, even though that story might change 1,000 times. So that would be kind of my insight about it. Now, the trick is that you have also to deliver those numbers at least as close as possible, because you say, hey, we're going to do like $1 million of revenue next year, and you end up doing $100,000 and you're missing your target by 10x, then you're going to have a problem, and you need to have a seriously good reason for missing it and to be outstanding at certain other parameters. So you need also to do an exercise, which is not easy, to kind of guess a little bit the future, so that you are going to stay in the areas of what you're projecting 12 months from now. Any budget beyond, by the way, 18 months, even 12, is probably going to be irrelevant, because no one has a single clue what's going on after 12 months. Like, honestly, like, who could have predicted what would be in crypto now 12 months ago. Like no one would have predicted FTX. No one would have predicted Ledger. No one would have predicted all of that craziness. No one would have predicted that OpenSea would melt. Like it's just impossible to do that. The only thing that you can bet is that, or you can assume that you will be there in 12 months and that your same brain will be there in 12 months. And most of your team is going to be there in 12 months and you need to play with that. So it's a bit of trick exercise, but again, it's more your mental model that matters versus like getting everything right over time.
Perfect. Thank you very much, Ouriel. I mean, you answered my follow-up question in terms of the time span for the budget. So 12 months does seem, even that, I mean, honestly, does seem too much. But yes, that's a good average. Unless someone else has a question, I just had one more question.
I think
you could just ask. Yeah.
I saw someone
asking a
asking
question in the chat.
Yeah, I saw someone asking question. Yeah.
Okay, Utkarsh. I'll ask another question later.
Sure, thanks, Mikan. So Ouriel, Utkarsh had a question. How do you go about building a business whose time is maybe not come just yet, but could have a huge potential in the future? For example, DAOs, could be a huge thing in the future, but right now, obviously, there's not much understanding or tooling around it that works. So curious on your thoughts about that.
About DAOs in general, or just future use cases?
How do founders build businesses that maybe don't have that draw at this point, but they potentially believe in that idea in the long term?
Yeah, I mean, I only know one way of building a business. You need to find something where you identify a problem that deeply and genuinely resonates with you. Like, and it doesn't matter if that problem is something that you experiment directly or not, but it has to kind of obsess you to a point that you can't stop thinking about it. And it doesn't matter if that problem is a hard reality of today, or it might appear only like a year from now, 2 years from now, but you need to be extremely attached to it. And the reason is simple. It is so damn hard to build a company that you will find a gazillion reasons to just drop it, to abandon it on the way, because it's just like so mission impossible. So you need to find something that resonates with you. Of course, it needs to be something that can make sense in the time horizon of a funding round. The funding round is typically 2 years, 2-3 years max. Okay, so that's something that has to be a reality, not just in the building, but in the adopting. Okay, so if you're thinking about like building I'm going to say something crazy, a flying car, it's a fantastic idea and it might prevent you from sleeping at night, but the economics of it won't make any sense before 5, 6, 7 years. And so no one's going to fund that. Okay, at least not now. You're going to be too early. Timing is important. But anything where you have a sense that something can become a reality 2-3 years from now, and you will have the grit to wait for it to become a reality in spite of all the obstacles, it's probably a good starting point. So don't try to kind of figure out great ideas. Figure out a problem that deeply resonates with you and that will make you break walls as you will find them, and you will find many.
That's really well said. And also, I think as founders, like you want to be early to ideas, and that's how oftentimes you'll have that edge going into the market. But ultimately, it's also if you'll have customers and users on the other side once you build it out. So I think your answer kind of perfectly captures that. Fiona, I see you have your hand raised. Do you have a question for Ouriel?
Yeah, I do. Thank you so much for spending the time to talk to us today.
Sure.
I have a quick question for you. I totally agree about being completely obsessively passionate. And I'm working on a project to help alleviate poverty using blockchain and using traditional credit cards. But I wanted to ask, we're looking to raise money from blockchains. Do you feel like blockchains is still like, there's still a kind of this race of adoption, and is that a good path? And like, what is your like kind of viewpoint about the different blockchains and which ones you kind of see maybe investing more or kind of being more aggressive? Thank you so much.
Of course, are you asking about blockchains to raise funds or to use for your project?
Exactly, to raise funds from a blockchain.
Okay, cool. Well, the answer is under our eyes. As you can see, there are stupid projects that raise millions of dollars on simple memes, right? So if that can happen, then how about serious project? I would say here is my philosophy. I think any project worth funding always finds a way, including in the harshest moments. Like there is, like if you look at the history of venture capital, there is never a moment of funding even. There is never a moment in time where things stop. They just slow down, but they don't stop. And so any project that makes sense with a good team, with a good drive, finds always a way to light. Okay, and so you should find a way. I'm not sure the best way to raise capital right now is through an ICO or I don't know what you call it those days, through a blockchain or through a coin. I'm not sure. There is a cost to it. And it's not just like psychological and everything. There is a legal cost to it. There is a regulatory cost to it. There is a compliance cost to it. You might want to consider twice before you do that. But it's not impossible. Obviously, all these meme coins prove that people are still ready to throw money at kind of stupid projects, or imagine like serious projects. And so in theory, any project is fundable as long as it makes sense, as long as there is a team behind it, as long as there is a good drive behind it. And in terms of like blockchains, I think the ecosystem right now is developed enough so you can find options, right? There is liquidity. Like when I first started this company, basically the liquidity was on Bitcoin and Ethereum. That's it. There was nothing else. Everything else was a would-be project and something in the future. They were like just starting to get to see the light of the day, but the liquidity were there. Today, you have liquidities in at least 10 to 20 blockchains. And so that you can, by the way, you can play with that. You can play with that and go to an ecosystem versus another and kind of compete for the kind of exclusivity of your project, right? Now, why should it be just you selling your project? All those projects need things like yours. They need projects to make their blockchain have any sense. And if they are just like pipes to pump and dump skills, then they should better, close doors and do something else. They need projects that make sense, that give a meaning to what they do. So pitch it maybe with that, use that maybe as a tool to raise your funding. There are many foundations today that are looking aggressively to fund projects, and maybe that's your starting point. Maybe you want to look at it from this angle and get to a community through a foundation.
Yeah, we're looking into grants as well because of the social impact side of our business. But thank you again. I really appreciate your time. I know it sounds like you have a million things going on.
It's fine. I still have some time for questions if you want.
Okay, awesome. And Fiona, we'll connect one-on-one as well because we are advisories in the works to partner with some different blockchains to hopefully unlock some grants for the community. So, that'll definitely be an opportunity soon. Mukund, I think you had another question, but before that, one question, because Ouriel kind of touched on this is, oftentimes instead of just founders pitching themselves to both ecosystems and VCs and stuff, there's also a conversation that needs to happen where founders understand what they're getting in return besides just the money. So Ouriel, in your experience, I wanted to, just hear what is the kind of support that founders should ask from both angel investors, VCs, even ecosystems in terms of resources, in terms of just hands-on help. So would love if you could touch a bit on that.
Yeah, so there is this myth that investors help to do stuff, but it's actually never happening. I've never found that investors come and do the job for you. You will do the job, period, right? You will have to find people to recruit. You will have to find partners. That's your job to do that. And maybe they will provide 1 or 2 intros or some assistance, but don't expect too much. However, to me, there is 2 critical things where I think investors could be helpful, and you can test those early, even before getting married with them. The first one is guidance. You are driving a car 300 kilometers per hour. You don't see, don't have the perspective into the reality so well, because there's so much going on, and you have like literally the eyes in front of the wheel, and you're driving. So I think investors can help you kind of pause a little bit and guide you to ask the questions you don't naturally ask because you are so much in a hurry to achieve stuff. So that's kind of value number one. And I think you need to detect that in the conversations that you have with them early. Like, pay attention to what questions they ask you. And the way they ask questions is often an indicator of how helpful they're going to be when you're going to be in business with them. The second element that is, to me, probably the most important is things are going to go south. Things are going to go wrong, inevitably, and very quickly, more quickly than you can imagine. And the good investors are those who are going to be there psychologically for you when you will be down, and they will not hammer you with pressure and with toxic comments and with gazillion stuff that could kind of make this company go to hell. They will assist you into either giving you confidence or giving you ideas, or just like being there to listen to your problem, because sometimes it's really, really difficult to bear everything on your shoulders. And so to me, the best investors, the best you can hope is that in some of the investors you're going to choose, you will have one or two like that. And you will find that incredibly helpful and material to navigating those moments. And so the way to identify that is try to be in a difficult situation before the deal and see how this investor behaves. Whether this is a disagreement, whether this is something that you promised to achieve before the deal that doesn't happen. This is, for example, a recruitment that you wanted to do, or even a term that you wanted to achieve in an agreement. Like, try to find something that is negative and see how the investor reacts to it and how he behaves with you. To me, this is incredibly important. And you need to have at least one or two investors in your pool of investors that is behaving like that.
That's great advice. Definitely something to keep in mind. And I like the idea of kind of testing out the theory before you sign any papers and just seeing how they'd respond. Mukund, I know you had a question, so over to you.
Yeah, I mean, I'm gonna let go of that. I have a better question given the conversation happening right now. I mean, that's a very scary hack, by the way. Because on one side you don't want to make it seem like you're incompetent in a certain way and have not achieved a certain milestone for whatever reason. But on the other hand, actually, my question was related to that how do you assess investors for all of this, like that investor project fit, right? Because you only have limited time. Doesn't matter how long the conversation goes for. Your actual time with them, if you put it in hours, is 2, 3, 5 hours before. So in that short of a time, how do you assess? And is it just reaching out to people that they have funded and then maybe getting feedback, or are there other ways to do
So
it?
the traditional way entrepreneurs think about investors is that they have to sell their projects so that investors are willing to give them a check, right? Like, you are selling something in exchange of something. And to me, that's the wrong framework. When you are in a relation with an investor, the right mental model to me is the model of a recruitment. You, the entrepreneur, are recruiting an investor. It's the opposite. They sell you and you buy, right? And they should service you. And their job is to provide the entrepreneur a service, and your job is to hire the best service provider as an entrepreneur. And if you look at it with that mental model, it will force you into a direction to ask the right questions, to pay attention to the right details, even the smallest one. Do they arrive on time? How do they leave you? How do they ask for stuff when they are in your office? Like, all these kind of small details, you will look at it in a complete different manner. So you are the recruiter and they are the candidate. And this is how to me, the best mental model to find a great investor. Of course, in those times, it's difficult to be arrogant and assuming that you're going to have a gazillion options. So sometimes you just have to kind of find, take what you have. But I will be very direct and very brutal. If you do not find the right person, don't go in business with them because you will pay the price for it. It's like a wedding. Don't take that man or that woman because that's the only one available right now. It's better to stay single. So sometimes it's really hard. And I can tell you in the early days of ZenGO, we had very promising conversations with an investor. And at some point, it was very advanced in process. I told to my team that this was the wrong partner and that we should tell them to go back home and that's it. And the problem is that it would kind of reset the counter to our project by a few months because we would have to start all over again. But man, there is not a single day I regret that decision. Like that ZenGO would have died 1,000 times if we didn't do that. So again, you are the recruiter, you are hiring a service provider. And if this is the only choice that you have and it's a bad choice, then don't go. That's all I can tell you.
Very interesting response. I mean, on the other hand, a lot of people do say that, hey, you're getting the money, deal with things later. But to hear the way that you put it makes a lot of sense.
That money has a price. Money has a price, and the cost of money can be lethal. And I've seen it firsthand. Project that died because they had. And by the way, sometimes they are the smallest investors are the most toxic, and you just know it too late, right? When you have to kind of sign a new document for a critical transaction, when you have to exit, when you have a critical, whatever ISO plan or something, like this is when you see the face of people. Like money will drive people to show their real face. And so you need to kind of come to that, to acknowledge that reality. And so don't take the money because it's there, you'll delay it. You will not. You will not. I mean, it will be probably too late. Now, here is the thing. It's not always possible to know early on. Like you might be the greatest psychologist on the planet and kind of know all the tricks and everything. Sometimes you don't find out and you only find out too late. And sadly, you have to indeed, as you said, deal with it when it happens. But if you can, or if you sense something is not right and you will sense it, your gut will help you, your intuition will help you, your surrounding will help you. If you don't sleep well at night, or if you wake up too early, or you go to sleep too late, you will know something is wrong. You will know, you will feel it, and then this is a signal that you shouldn't go.
On that line, I mean, do you have any quick hacks over your experience, right? So almost like red flags that you look out for when, like you said, recruiting investors, right? Any quick red flags that would be interesting?
Well, there's so many, but I think the moment of truth is when you start to discuss terms of the investment. They usually, you will want something, they will want something else, and the back and forth of disagreement is a very revealing moment. You need to kind of feel that the disagreement don't make you feel that you are losing. Like if you feel that you are losing to a point that it makes you feel bad and you will not come back from it, then it's probably a signal. So that's one. The way they can also express themselves can be also very revealing. The terms that they use, the tone that they use, the way they could talk you down, all these kind of details are also very revealing. And their capabilities, in spite of being in the position of France, because they have the money, to accept some of your requirements, some of your needs, like the fact that they listen to you, the fact that they go a little bit your way, is also usually a good indication. If anything is about, hey, this is my terms, this is my way or the highway, it's probably not going to be a good investor for you. And you're probably not going to find a partner, but really a banker. And, you don't want to be in business with bankers. It's not a good idea.
Perfect. Thank you. I mean, I could go on, but no, thank you very much, Ouriel. These have been very, very interesting, insightful observations.
Of course.
And Ouriel, I know we're almost at time, so just kind of quick questions on my end. One, I wanted to hear kind of your input on this question that's been coming up a lot in our Telegram group chat with the founders. Also, new chip just blew up recently, and a lot of accelerators have been kind of losing out on some great deals and things. So I wanted to understand, in your perspective, being on the other side of that equation, what would you recommend to founders early on between accelerators or going the more traditional kind of VC or angel funding route, and understanding, what might be ideal for them?
It depends on so many things. It depends on the nature of the project. It depends on how educated in the sense of experience you are. If it's your first project, not your first project. Usually, the most important asset to an entrepreneur is time. Literally, this is the one thing that you need the most and that you will have the less. And so anything that is a shortcut to the next step is probably a good idea. So if the fastest way for you to raise money and the quietest option for you is to raise money is A or B, take it. What you want ideally is a path that allows you to get to funding quickly. And once you get it, they, as much as possible, don't go in the middle of things that you're doing, right? They will trust you and let you do things, and they will be there when you need them. That's kind of the ideal setup, okay? And so it really depends of your project, but whatever allows you to go to the fastest point of closing and to the quietest setup for you to operate is probably the best. Now, there is one exception to that. Some people need more guidance than others. And because either they are less experienced or they don't know well enough the ecosystem in which they are operating, or for other sorts of reasons. If you believe that you need particular guidance, and when I mean guidance is operational guidance, not strategic guidance, it might be a good idea to be in an accelerator, because the density of interaction will be much higher, not just with the people of the accelerator, but with other companies. So that might be a good idea to kind of expose yourself to this aquarium instead of going to the ocean and try to kind of find your way there. And then you can join the ocean out of the aquarium. And so it really depends if you feel that you need more guidance or that guidance is needed. And by the way, that has nothing to do with experience. I know many experienced entrepreneurs that prefer to go for a particular project through an accelerator, because again, it helps them shortcut the path from I don't know to I know something. So you have to I don't have a magic recipe for which way is the best. You'd have to kind of sense it based on your needs.
Helpful. Something that I've been echoing as well is just based on how comfortable you are just going at it yourself versus requiring that kind of support. So I think that's perfect. Sure. And my final question, Ouriel, for you is, besides obviously Web3 security, what are some trends or areas in Web3 that are exciting you as founders look to new areas of opportunity and just things that might be exciting and they could find their passions in?
There's so many. I'm incredibly excited about payments in general. We recently raised a round and we had some investors that paid us by bank transfer and some that paid us with crypto with stable coins. And man, the experience with stablecoin was like butter. And the experience with bank transfer was just like a nightmare. So much things that get lost in translation, errors, documents to provide to the bank so they release the fund. We basically lost so much time. And anything that is international payment, very, very bullish about it. I'm in particular bullish about this AI thing, not because of the AI per se, but I do believe that bots and AI agents will need to find a native way to transact between each other. And what I mean by transact is any sort of transaction, economical transaction, paying each other, paying for the bills, paying for the GPUs. And I think crypto will be a fantastic rail for that, much, much better than typical fiat rails. So to me, AI is a friend of crypto. So payment to me is a great, great use case. Obviously, gaming is also another. There are some great projects that are coming. Some we're going to collaborate with that I know I can speak of, but I know that they are going to be literally changing the game, no puns intended. I'm very, very excited, although it's early, about ways Twitter could be disrupted in a way that produces less toxic conversation, more meaningful relationships, more transparency, and more importantly, a place that feels safe. To me today, Twitter doesn't feel like a safe place. And so I'm looking for a certain number of projects. One of my favorites is probably Farcaster. It looks like really well thought, great community. I'm spending more and more time there. And there's probably more use cases, but they don't resonate with me. So, I mean, the world of art, of course, very, very exciting. I mean, I know NFTs at their boom and their bust, but I do believe that creating a direct relation between the artist and its audience and its fans is game-changing to the situation where you have intermediaries that are capturing 80% of the value for doing 20% of the job. And so, which to me makes no sense. This is a balance of power. It makes no sense. You do need intermediaries sometimes, but not to that proportion. So I do believe that there is a way of kind of shortcutting the creation, the path of value creation between creators, artists in particular, and their audience. So all those use cases are incredibly exciting to me. But there's so much going on; it's hard to keep up.
Awesome, thank you, Ouriel. I love that because payments is my background, and obviously now I'm working on a Twitter competitor social platform. So it's good to know that I'm thinking in the right direction. Yeah,
of
that's
course.
Amazing. So Ouriel, I know we're at the end of time. Thank you again so much for giving us a whole hour, that too on a Sunday. Really, really appreciate it. And from the comments, I think the founders really loved this session as well. So thank you again for joining us. Is there anything that you want to plug to the community? Personal Twitter, ZenGO, anything in the works?
Well, I don't need to plug that. I mean, of course, I'd be more than happy if you all guys, especially after what happened in the last few days, try ZenGO. I think you'll be surprised by but of course, let's keep the relation going. Find me on Twitter, and let's start great conversations.
Awesome. Thanks so much, Ouriel.
Of course. Bye-bye, everyone. Thanks for your time. It was a pleasure.
Thanks, Ouriel. And thank you again, everyone, for joining us on a Sunday. Really, really appreciate your time. And hopefully this session was worth it. And I've sent everyone an email today, so you'll be able to put in your best times for this week. So we're going to try to do another community catch-up and another guest speaker. So please definitely vote for the times that work for you this week. And also, you can now schedule one-on-ones with me for this week and next week if you want to grab some time. So that should also be in the email for everyone. And with that, end of today's call. Thank you.
Bye-bye.
And I'll see you guys this week.